Why, hello, everyone. Welcome to another episode of the Full Subjects podcast. Doing something a little bit different today. I am going to be riding a solo episode here. We were meant to record at 1:30 and Cole had some personal stuff pop up. So yeah, this is our maiden voyage and first episode solo. So you'll get to hear me yap, let's say, for the next half hour, hopefully with some insights. Obviously, I'm more of the real estate focus to the Full Subjects podcast, and Cole kind of brings the finance background, but I will be talking about the market economic update, as well as diving into the stats package as well. Also, something we did for today, we're doing a bit of a mailbag. So we'll put something up on social a couple hours before we were meant to record to answer your listener questions. Got some great questions, really insightful questions from a lot of people, which is awesome. Also had a couple buddies just chirping me. So thank you guys if you're listening for that. Those are always fun to read. But should be a great episode, and thank you for joining me for a solo episode. As always, guys, this podcast is for informational purposes only. It does not constitute legal, tax, investment, financial, or any other advice. It's not intended to cause or induce breach of any existing agency agreement. And what we always remind, as much as we talk about general things that we're seeing, things that we're experiencing in the market, some general tips and tricks, obviously, as well. Everybody's situation is different. Always good to have individual conversations and reach out if you have any questions about your situation. And as always, if you're listening and not subscribed, make sure to leave us a 5-star review and subscribe. That way you're notified as soon as an episode comes out. And it also helps people find us as well, which we always appreciate. But let's hop into it, guys. The market and economic update. So right before we recorded, you've seen this kind of floating around on a couple different social platforms, the Canadian economy kind of numbers with jobs and unemployment. All of those numbers kind of came out early today or yesterday or during this week. So I wanted to talk a little bit about those numbers because obviously that affects the markets, interest rates, all of that good stuff. So Canadian economy dropped by about 25,000 jobs in January. Manufacturing jobs make up most of that number, and that was the largest decline since August. From some of the people I talked to, obviously, on the manufacturing side, we're still kind of feeling the effects of tariffs, and those are still slowly starting to affect different industries in different ways. So, when I see that number, let's say I'm not really surprised. Often what you'll see too around this time of year, seasonal jobs, like obviously for Christmas, those tend to disappear obviously when Christmas is done. So I wouldn't be surprised if that factored in as well to some of those jobs, which is interesting. And I know too, I'm not sure if you guys experience this as well, but a couple times even during the holidays, you'd go to the mall or you'd go to kind of different stores, and don't get me wrong, some of them were crazy busy, but in some other ways as well, it did feel like some of those larger places were a bit quieter. And I don't know if that is just people maybe focusing on more online shopping, just as that gets easier and easier. Obviously, economy-wise, has been better, and I think people are maybe getting away from some of that discretionary spending as well, and I'm sure that would kind of influence that as well of what kind of I saw and what we were kind of feeling, but just something to chew on there. Employment fell to 6.5% from 6.8% due to less people looking for work, and we've seen tariffs impacting Ontario the most due to the automotive sector being large there. The Canadian dollar has gotten stronger since the beginning of 2026. That's great news. The Bank of Canada governor spoke on February 5th, and a couple notes from that. If the economy slows down because we can't produce as much stuff as before, so for example, fewer workers, supply chain problems, or lower productivity, cutting interest rates isn't a good fix. Lower interest rates are meant to boost demand. They encourage people and businesses to borrow and spend more. It's a warning that central banks shouldn't treat every slowdown the same way. Some slowdowns are about weak demand, where rate cut helps, but other are about limited supply, where rate cuts mainly risk raising prices. All this to say that a rate cut is not likely right now, and rate increases are still on the table for the end of 2026. You've kind of seen this floating around online, and income in some of the financial sectors. So the different institutions and different banks will often kind of predict or model out what they are anticipating policy rate forecasts. So, the graph that I'm looking at, and I'll see if I can provide a link or have this pop up on the screen while we're editing. So, Q1, not many people or not many of the banks and the banks that were kind of pulled here were TD, CIBC, RBC, BMO, Scotia, and NBC. Some of them, none of them are predicting any rate increases in Q1 or Q2, but as soon as Q3 of 2026, you're starting to see some of those predict rate increases, which is kind of interesting to follow. And then more of them as we get farther into the year by Q4. I'd say most or some of them are starting to predict some increases, but as of 4 of 2027, again, you're starting to see consensus of most of them thinking that policy rate will increase. So that's interesting. Obviously, that's a year or 6 months to a year from now. So still some time from that, and a lot can change, of course, but interesting to follow that out because obviously that will affect anybody who's taking a variable interest rate mortgage, assuming that you're on a variable payment. Normally Cole's the one that obviously talks about that, but just want to touch on that. As far as how much it would increase, obviously it depends on the size of your mortgage. If you have any questions individually on that, make sure to reach out to Cole because he's going to be your numbers person for that. Let's hop into the stats package next, and then we'll finish up with the mailbag. So the headline from the Fraser Valley stats package for January of 2026 was Fraser Valley home prices back to pandemic era levels under weight of economic headwinds and sustained inventory. 3,078 new listings in January, up 128% month over month. Shocker. Active listings were at 7.7 thousand or 7,700 in January, which is about 1% higher month over month, and then 54% above the 10-year average. So to put this into context, one of the reasons that those listings probably went up substantially, a lot of people end up canceling their listings in December for a multitude of reasons. Maybe they don't plan on, getting a bite during that time. It is slower. We talked about that in the last, obviously, stats package. A lot of that inventory comes back on. And then obviously too, with that, there are some people that definitely, I have conversations with, and I'm sure Cole has conversations with too, that reach out in December. And the game plan is for first or second week of January to be hitting the market. So not really surprised by that number. We typically see even more activity in February and March. Obviously, we'll be talking about that in transactions next. So actually, let's pivot there to talking transactions. So 619 transactions or sales in January, which is a 33% decrease from December and 24% lower than January of 2025. Definitely slower than what we've seen, even last year, which doesn't really surprise me. We're still kind of earlier in the market. I think there's still a little bit of hesitation. Like the sentiment, when I think back to the conversations that we were having this time last year, definitely felt a little bit different. So that doesn't necessarily surprise me. But even over the last couple of weeks, we have started to see activity pick up, like more showing requests on our listings at the open houses that I'm going through. And I see this not just personally, but also from other individuals in my office. Anecdotally, we're seeing more activity at open houses. And I think that is also due to, I'm seeing better prices on things. Like people are kind of coming to grips with the market and what things are actually selling for. You're seeing, as much as you are seeing things on market 30, 60, 90, 100 days, and that isn't necessarily rare. Some of the newer listings are coming on at, let's say, better prices or more realistic prices, I guess I should say, because all of those other listings are kind of doing the homework for you, especially if it's a similar product and it's been on the market for X amount of time. They're kind of doing that market research for you, and you can make a better educated prediction of your home's market value when you have those other comparables out there. And, with 7,700 active listings, obviously there are some very unique properties that we come across that have different features that are very distinct from others. But depending on product, like you're able to find some good comparables on the market as well as solds right now too, which is great. Sales to active listing ratios were down to 8%, which is 5% lower than December. So back-to-back buyers markets there. What's interesting, like different stats packages will highlight different things, but there are some like certain pockets in certain markets where we're seeing balance. Some of them are still, or most of them I would say are still leaning towards more buyers markets. And that's based off of like a percentage of what is selling, obviously. And that's the sales to active ratio. But yeah, anecdotally, it does feel like things are picking up a little bit. And I wouldn't be surprised if we're sitting here in February with more sales or closer to what maybe last February was. So that's interesting. Let's talk some benchmark prices as well. Benchmark prices, overall, they're down 1% month over month, about just under 7%, so 6.9% year over year. And you're kind of seeing that pretty universally across the three asset classes. So detached was down 1.1% month over month in January. Townhomes were down 1%, and then apartments were down 0.6%. And in total, apartments are down the most year over year. And I think, again, that's just, there's a lot of condos out there right now. So for first-time home buyers, great opportunity for you if you're thinking of getting into the market. So not only just lots to choose from, a lot friendlier prices as well, which helps. Days on market averages have changed. We're seeing all three asset classes, your days on market average being over 50, which is a fair chunk of time. So 50 days for townhomes, 53 days for condos, and 55 days for detached. One caveat I always throw into that as well is those are for units that sell. What that typically in the stats package does not account for is, sometimes what people will do if they are price reducing their home is they'll cancel the listing and relist at a new price. So that way it shows up as a new listing as opposed to, 90 days or 60 days on market. So sometimes though those numbers can be skewed slightly. So just something to chew on there. All right, let's hop into the mailbag here. So some great questions. Some of them, like I joked about earlier, not going to be able to read out loud, but do have some great ones here. So first one, we'll start off with, are homes selling above or below asking price right now? So what we are seeing, and I'm going to pull up the stats package for the exact number, is most places are selling under list price right now. So that number, percentage of list price for the Fraser Valley for all price ranges for detached properties was 96%. For apartments, it was 97.1%. And for townhomes, it was 97 point, all property types combined. Again, you're sitting at like 96.9. So what does that mean? Most places, I would say, are being listed what I call traditionally right now. So what I mean by that is, let's say you list a property at $1 million. Somebody's going to come in slightly under. So some people, when they're listing, are kind of leaving a little bit of room to negotiate, knowing that the sentiment is people feeling like they want a bit of a deal. They don't want to pay list price. Obviously with that, there are exceptions. We are seeing some places for sure selling slightly over a list price, whether that's something being priced really well, having a couple offers and somebody paying $5,000 or $10,000 over because they really want it. Yeah, that happens for sure. You are seeing some people as well purposely underlist the property to try and kind of, drive multiple offers and try and drive the price up. That's a strategy for sure that some agents and some clients use. And there's different situations for that. I don't really want to give too much advice on that because, again, every situation can be different. But for the most part, most places are selling under list price by a couple percent. All right, second question we have, what negotiation trends are you seeing in the market right now? So that can include conditions, closing dates, concessions. Great question. There, I gotta be careful with how I word this. You're not seeing a lot of subject-free offers. You are on some. I would say there's certain product for that. Maybe it's just land, or again, I gotta be very careful. So yeah, most things I would say, if you're a buyer listing right now, you're gonna be able to do your due diligence on the homes that you're buying. So that means that you're going to be able to have time for your financing, have your inspection. You're going to be able to review all of the strata documents, which is great. You can kind of have your time with that. Closing dates. This is a really important one. When I think of what can be negotiated in an offer, you've got three kind of main pillars. So there's obviously price, so what you're paying. Second is going to be obviously terms and conditions. So whether you have subjects, whether you're going to ask for, the home to be professionally cleaned before you move in. And there's, pages upon pages of potential conditions that you can have in your offer. But the third one is going to be dates as well. So when do you plan on purchasing the property and when do you plan on moving in to that property? So this might sound like breaking news, but a lot of times when you plan on moving, you have to move from one place to another. I know it's great analysis, but closing dates can be something that's really important to a seller. because depending on what you're planning for your closing date, if the seller plans on buying another house, they're going to need to kind of coordinate those dates to line up. So, definitely if you're in a position where you are renting right now or living with family, or you can be flexible with dates, that can really give you an upper edge in negotiations right now, because you're going to be able to go to your sellers and say, or the sellers potentially in your offer and say, hey, we can kind of coordinate you finding another home, which is going to give you peace of mind as one of the things that's going to make our offer more attractive. This is a conversation that we had with I had with some clients of mine this week on an offer that we wrote. And, in that scenario, we were competing, and the fact that our dates could have been flexible actually helped us win against the other offer, which was great. To put this in another perspective, as an example, if you are flexible with your dates and you find something that's vacant, you can probably negotiate strongly or maybe save some money by moving into that property earlier or sooner, because that's going to avoid some of the carrying costs for the sellers too. So definitely certain scenarios and certain circumstances where dates can be something that you negotiate for sure. So that is something to chew on there as well. Third question we have from our mailbag is, what offer strategy works best in this market? Best is kind of subjective. So what advice would I give on this? I would say, the sentiment right now, especially on the buyer end, is people want to, with so much inventory and so much to choose from, a lot of people want to, they might find a place that sticks with them and is like, wow, this has everything that I want. But, people might be nervous to write on that because they might be wondering or worrying, hey, what if something else comes along that I maybe like slightly more? And that's a completely reasonable and fair question to be asking. So as far as strategy of what works best in the market, I think is having certainty and just, reviewing things and just really asking the question, okay, so if we buy this product or we're interested in this product, does it check all the boxes? Are we good with that 8.5 or 9 out of 10, or do we really want to wait out for the 10 out of 10? But also balancing the what ifs with just having enough certainty and wherewithal to kind of make a decision on something. So, as an example, sometimes if you wait a week to write an offer on a place that you like, that is also another week potentially of that property being shown to potential other buyers. And all it takes is somebody else coming along and finding you're deciding that they really like that property. And then all of a sudden, maybe you're competing and you're having to pay more, or maybe you're having to, sweeten the pot, or, negotiate not only with the seller, but with another set of clients or other people. And that obviously changes the dynamic a little bit. As far as offer strategy, kind of going back to the original question, really depends. Every home has different circumstances and scenarios of why it's sold. So kind of tough to give blanket advice on that. Next question we got. Is the market expected to improve for sellers this year? Should I wait to list or list now? That is a great question. Is the market expected to improve for sellers this year? I've seen different models or different stats talk about different things. We try and follow this obviously as much as possible to give the best advice or give the best information to people to make informed decisions. It really depends on your situation. So there's some people I think that want to move, and there's definitely some people that have to move, whether that is needing more space. In some scenarios, maybe people need to sell because they need less space. Maybe they're, obviously there's financial components to that, but maybe somebody's older and they're having a tougher time doing maintenance on their home and keeping up with all the work it is to own a home. Obviously there's different, scenarios for everybody. As far as whether or not the market is expected to improve for sellers this year, it's really tough to say, because on one end, typically in the spring, we do see upward pressure on prices just because of demand. The spring market is the most active market of the year typically. But when we balance that out with the fact that, inventory is already fairly high, like we talked about earlier. So inventory being listings. When you balance that out with more listings probably coming, because if people do plan on moving or upsizing, that's great that they want to buy something, but they're also bringing more inventory to sell to the market. So I wouldn't be surprised if, as much as that demand kind of raises up, we also see inventory maybe cycle up a little bit more. Is that enough to do, or is that enough to kind of put upward pressure on prices? I mean, I don't think so. We're still sitting there with a lot of inventory. As far as, listing now or later, really depends. Like, I've had some conversations with people where, they're thinking of maybe getting more space or upsizing, and they have a condo that maybe they're in a position to hold on to while they're upsizing. And for some people, it does make sense for sure to, sell and jump to that next product. For some people, depending on area. So like, let's say as an example, if you're closer to some of the future potential of the SkyTrain that'll be finishing off in the next couple of years, hopefully, maybe it makes most sense to hold on to that for a couple more years if you can. It's good to kind of sit down and weigh all the pros and cons and make a decision. Yeah, it's really, really tough to say. I wish I could give like blanket advice on this one, but everybody's situation is so different. Whether you would rather have some of that investment, if you have like a tenanted property, maybe you'd rather have some of this, maybe you rather sell and have some of that cash more liquid so you can do different things. Again, everybody's scenario is so different. So it's really tough to give blanket advice on that. That is what we got for the mailbag questions. This was a lot of fun. I feel like I've been talking pretty good for 24 minutes here. So thank you guys, if you're still with me, for continuing to listen. We'll see you next week with a great episode as well. Good old fashioned Cole. Take care on his behalf, and we'll see you guys next week.